Let's talk to Ricardo. He is from ActivTrades. Very good morning to you, Ricardo.
Good morning, Nick.
What a pickle the world is in right now. The newspaper headlines, obviously, equities collapsing, Mr. Trump, IMF, GDP, Brexit.
Yes.
Where do we begin?
Well, quite interesting situation, as you said. President Trump thinks that the world's going crazy. He said the Fed is going loco. Those were interesting words. He's probably trying to divert some attention from his own contribution to the current state of the affairs. As we know, it sort of triggered trade tensions that could escalate to trade wars. Maybe we're not there yet, but we could reach it soon. Is blaming that the Fed is trying to do what most people would see as the orthodox way of trying to slow down the economy to avoid overheating. I mean, the US at the moment, full employment, pretty much everything firing on all engines. The economy is growing. I mean, they have to raise interest rates, of course. Well, whether it's President Trump and his aggressive policy making, whether it's the Fed that is rising rates too steeply at a faster than desirable rate, whether it's both combined, probably the most likely. What's happening is that there's a change in flows at the moment. I mean, it's hardly surprising. I mean, with 10-year treasuries at the moment, well above 3%. It's quite natural that investors are looking into a less risky alternative and moving some of their investment, well, cashing in on what has been a very long bull market and looking for safer investments. Looking ahead, difficult to say if this is the start of a bear market or if it's just, as President Trump said, a correction. We don't know. It's probably a correction more than the beginning of a bear market, because if we look at the fundamentals for most of these companies that are now in the headlines as having big losses, they're still pretty good. Both in the US but also in Europe, and one could even argue that we could see some flows from the US to European equities, because European equities are seen by many as being undervalued. So I don't think we are looking at Armageddon yet, but probably just a temporary correction. But everything will depend on how the trade tensions unfold, if they become full-blown out trade wars. If the Fed raises interest rates again in December and then 4 times next year, that could also have an impact and make risk-off assets even more interesting for investors. But for the moment, I don't think that we're there yet.
Okay. In terms of currencies, what's your favourite currency pair right now?
Well, an interesting pair has been the Brazilian real against the US dollar. It's quite an interesting situation there. So as you know, last Sunday they had the first round for the presidential election, and the choice is pretty much between something that could be comparable to Mr. Salvini in Italy, so quite right-leaning. Some people describe it as fascist. That's probably a bit harsh, but something like that. And between someone who's linked to a Venezuelan model, Haddad. So Bolsonaro and Haddad. Strangely, the markets are gaining encouragement, and investors are gaining encouragement from the performance of Mr. Bolsonaro, the right-wing candidate, and they see him as quite market friendly, probably because he is linked up with someone who was educated at the Chicago School of Economics and is quite a high flyer in terms of the credibility he has as a free markets man. However, Mr. Haddad is very nationalistic. And in the past, he is voted in the Senate, in the Brazilian Senate, is voted for policies that are quite populistic and not very friendly to the markets. So, strangely, the Brazilian real gained quite a lot of ground against the US dollar following the good performance of Mr. Bolsonaro in the first round of the elections. And it looks like it's still on the upside against the dollar. So I think that's a very interesting pair to watch. And should Mr. Bolsonaro, the right-leaning candidates, win the election on Sunday, we could see an interesting move there for the real.
Okay. Final thoughts. Should people be panicking generally at the moment? Should they be cautious? What should they be doing? What would your advice be?
I wouldn't dare to advise you on this. I would probably seek your advice. But I would say that this is a time to be moderately cautious. So I don't think that we are at the point of running away for the, it's not Armageddon yet. It's not time to seek the nuclear shelter yet. But we need to be careful and watch things very, very closely, especially trade tensions, midterm elections in the US, Brexit negotiations, the escalation in oil prices. So all these factors combined are generating a little bit of turbulence and uncertainty in the markets. So I think there's good scope for risky assets to be invested on at the moment, mainly European and emerging markets as well. But I would be cautious and perhaps hedge my positions with something less risky as well.
On that note, thank you very much, Ricardo.
Thank you, Nick.